to All Things Conversational.
where we talk about whatever comes up.
Some days, yeah.
Yeah.
Sometimes we do hit lists. Sometimes we actually have a plan. And today we actually happen to have a plan.
Yeah. Today we are hopefully
Part 2.
part 2 of what is our first time homebuyer journey.
Yeah.
And if you didn't listen to part 1,
You might want to go backwards.
you might want to go backwards and listen to that one. But here's the Coles notes, Spark notes. Here's the TikTok version.
Yep. Okay. So work with a realtor.
Take some time, learn
interview
something.
a realtor.
Interview a realtor.
Learn something about your house.
Yep.
Pick a realtor.
Mm-hmm.
Sign a BRA.
Mm-hmm.
And do an interview.
With?
The realtor.
Okay. And
Then the realtor's going to recommend the great services of a mortgage agent that they've hopefully worked with.
Ideally,
that you want to have that person that has a relationship with proven track record.
Yep.
And again, as the quarterback of the process, the realtor should have 1, 2, 3 people that they've worked with over the years. I'm in a unique situation. I work with both the people that we recommend, but most realtors will have that connection of somebody that they know, trust, and can communicate with. And I think that's one of the big things is
huge.
That communication between particularly the mortgage agent and the realtor through the process.
And then
is probably
mortgage agent and lawyers.
Right. So today we're going to take you on a bit of the journey of the mortgage world.
Yeah.
Right.
Hopefully it won't be too boring. The house purchasing side is always the fun side. It's the part that people get really excited about, right? Because it's tangible.
Yeah, you see it. You've got that feeling of
it's the
home,
emotional,
right? Yeah.
My side is, hey, I'm about to dump you into a bunch of debt.
Not like that. He's going to dump you into a bunch of equity. Is what he's going to dump you into.
Well, it's a bunch of debt that's matched with equity.
Yes,
because we can only go so high. But all jokes aside, you will not be put into anything that you cannot afford because you simply will not be approved for it.
Yeah. There are checks and balances in place to make sure that you don't do that. And I think there are a couple that we probably should talk about through the process. One of them being the stress test. Because I think the stress test for people to understand is extremely important. But
I think it's
loan to value ratios and
we can dive in there.
Servicing stuff, not necessarily the parameters of it, but maybe an explanation of
why. I'll dive into what GDS, TDS really tell you, because a lot of people know they exist, but don't quite understand what those numbers mean.
Yes, agreed.
And when you understand what they mean, you're going to understand why they are important. But
so let's start at the beginning. I send somebody to you.
Perfect.
What's that first phone call like? What's that first connection like with you and that consumer who comes to you and says, you know what, I've been to the bank, but Steve recommends that I talk to you because you're going to have more options, more serviceability, more of this, more of that. What does that first call look like to you?
It's pretty simple. And that's a very common occurrence. It's, hey, I talked to Steve. He said, we should talk to you first before we start looking at houses. My first question often is, have you been to talk to your bank yet?
Okay.
It's like
are you just getting that out of the way?
Yes.
Okay.
100%. It's to protect everybody's time.
Okay.
For one. And two, it gives me an idea of maybe their baseline knowledge.
Okay.
If they've been to talk to their bank, they may have been exposed to some of the jargon. And my side has so much jargon.
Yes.
So much jargon that I always try to simplify for my sake and for everybody's sake. Like amortization, the word that people can't pronounce, right?
Yeah.
And I just tell people, I go, this is the length of your contract, and the term is how often you get to renegotiate it.
Mm-hmm.
Right?
Good explanation.
That's it. That's what it is. Yep. Right? So if they've talked to their bank, they have a little bit of a baseline. I always ask did your bank ask for any documents? And just those regular probing questions.
Yep.
Exactly.
Yep.
But sometimes it's like, no, we haven't even been in there, or we don't even want to talk to them for whatever reason, which happens. But the first conversation is, let's look for red flags.
Okay.
Let's ask the questions that are going to be the immediate red flags.
Okay.
So I always dive into who did you talk to? Like, who's your realtor? If we didn't know.
Yep. Which does happen, by the way.
It happens, yeah.
Realtors, if you're referring them, call the person you're referring so they know where the referral's coming from.
Exactly. Um, and then, how far into the process are you guys? Have you gone
Yeah.
to look at houses yet? And
Which you shouldn't have, but
yeah, but
yes.
you never know.
Yeah,
Something they may have met at an
100%.
open house,
Could be
right?
100%. Yep.
So we'll try to figure out kind of where they are, because that also tells me the urgency,
Right.
right? If they've started to look at houses, they've started to begin to get an emotional
Yeah,
attachment to things,
yeah,
and that is going to be a tremendous driver for how fast they're going to probably attack this mountain of documents I'm going to ask for.
and let's be clear, and I think there's a misconception out there that this process is easy. From the realtor standpoint to the mortgage agent to the lawyers, you're gonna sign about 300 pages of paperwork at the end of the day. It's
Probably,
probably what it's gonna come down to.
yeah.
Just on the real estate side, you're gonna sign at 20, 25 pages. Right? Just and that's just on the real estate side. Like, and I'm not even talking, once you get
Before you've
into
done an application, you're probably going to sign a dozen with me.
right. So so you're like you're at 40 pages before you've even got a mortgage commitment, right? And then the mortgage commitment comes in and all the other steps along the way. There's a
Sure.
lot of paperwork.
Yeah.
You're going to sign at some point you're going to get a report inspection report that's going to be 40 pages. Like there's going to be a lot of paperwork. You're going to have to be involved in this process
Yeah.
both ways. So just
Whether
want to
you're
clear that.
like, you should keep this all somewhere. So if it's all coming digitally, save it to a, a
To
Google
a Google
Drive,
Drive, whatever.
whatever you're using.
If you're old school,
Um,
print it out, put it in a binder.
yeah, whatever you like. But it's a good idea to keep it all
Hmm.
somewhere. Don't delete those emails. Keep it all.
Yeah.
But I'm having the first conversation with folks, and I'm trying to just get to know them a bit.
Yep.
Because as much as we talk about, they're interviewing us, we're interviewing them. And I'm trying to figure out what they do for work, how long they've been there, their timeline.
Right.
This is also a big one, right? If we're just getting our ducks in a row, right? They're like, hey, we've just started to save up money. We're looking in 3 to 6 months. The conversation does take a different turn at that point. And the reason I say that is because things can change so fast in that 3 to 6 month range,
Yes.
right?
Yeah.
Between rates, between housing market, between even just having to get documents, what I call refreshed,
Right.
right? Because they go stale. Certain
Yep.
documents have to, they have like I call it a
Lifeline.
shelf life,
Yep.
right? You got 60 days on certain things.
Hmm.
So the conversation becomes, well, what's your timeline? Maybe you didn't tell the realtor that you're looking within 6 months, and
Right.
it may have gotten missed. But in our scenario here, these guys are looking within the next 3 months, we're going to say.
Okay.
Okay. So they've started the process. They have some money saved up. We figure out they've been employed for, we're going to say 2 years at least.
Yeah.
They think they have good credit, you
Think
know.
being the key word.
And a lot of people use these online, like Borrowell, Credit Karma. They're not as accurate, but they put you into a good ballpark.
To give you an idea.
Sure, they'll
Yeah.
tell you
But here's
whether or not you're like in excellent versus poor
yeah.
territory, right?
Listen, most of the big five banks have a TransUnion account that you can log in and get a pretty good accurate. Most
Yeah,
lenders will take TransUnion and Equifax,
Equifax.
so you'll have an idea of where your credit is. It
Yeah,
may be a few points one way or the other if you do through the bank,
100%.
but it's not going to be catastrophic one way or the other from
Exactly.
TransUnion to Equifax.
And like this first call is a very like a 10,000-foot view. Like
Yep.
if you tell me your credit's 560 because you know it's 560,
Yep.
well, I'm going to know that your Credit Karma and the Equifax I use is not going to say, oh, 560 is actually a 720.
Yeah.
I know that we've got some bruised credit here we've got to deal with.
Yeah.
So then it becomes, well, how can we repair it? So anyways, we dive into your income, how it looks. We dive into your down payment, where it's kind of saved, whether or not it's being gifted from family members. And we dive into um, the house a little bit.
Okay.
Because if you have been looking, let's just say country properties,
Yep.
I put the bug in your head to say, okay, there are a few extra hoops you got to jump through with that. Because not only do you have to be approved, the house has to be approved,
Yeah.
right? And so
And that's huge.
it is huge. And it's, I think, become bigger,
Oh, I would say so.
right?
Yeah.
Because at the end of the day, you'll hear us use the word lender, but it's a bank, it's a lender, somebody who is an institutional lender giving you money. The house is what they're using as their collateral, their security, right? And if they're not happy with the condition of the house and they can pick whatever reason they essentially want.
Well, I don't even have to give you a reason. I can just say no,
Exactly.
right?
But they'll say, "Oh, we don't like this in the house."
The other thing that they talk about a lot that I don't think the general public understands is the marketability. So
Yes.
if something goes awry and God forbid you lose your, you lose your
How
job and you
quickly can
can't
we
afford,
sell this?
how they don't want to be homeowners.
No, they don't,
They
and that
th-
is huge. Thank you for
it's
bringing
an
that up.
asset to them, right? So
Yes,
they want to get offloaded if they have
as
to as
fast as
fast as
possible.
possible. So unique properties sometimes are, not easy to deal
Yes,
with on the lending side,
even
right?
like when you say unique, we had a rental property one time we were trying to finance, uh, in a very good area of a very major city in Niagara, and what was a hang up for the lender was that we had a flat roof, but everything around it was peaked.
Hmm.
I don't know if you remember this at all.
I do.
Okay. And something as small as that detail,
Yeah.
loan to value was great.
Yeah.
The client was fantastic. Everything else had good merits to it, but it was the remarketability of the property.
And another thing, and maybe you can touch on, is it's multi-layered, right? The lender has to approve it, but so if you're under 20% down,
The
so does
insurer.
the insurer.
Yeah.
And sometimes it's the insurer that kicks and screams about a property,
Yep.
especially for certain, like for CMHC, that won't lend within a certain, or won't insure within a certain distance of industrial,
It's
right? They have
there
little nuances to
there
their
are
products.
hoops. And so when you start this mortgage process and we're having this first call, that's kind of what I'm trying to lay out in front of you is listen, the workload is on the front end here ideally,
Yeah.
right? Especially if we're looking at a 0 to 3 month time frame or time range.
Yep.
Um you're going to get a document request list that is substantial,
Yep.
right? And I've had the remark where people go, "Well, my bank didn't ask for any of this."
Yeah.
And I go, "That's not a good thing."
No.
Right? Like,
Should be followed up with they will.
they will, and that's what I often end up telling them. I go, "They're gonna ask for this as
Yeah.
well."
Yeah.
But I will say the last couple of clients who had gone to a bank, their bank had asked for all of this,
Which is good.
which is really good. I
Because it puts
agree,
everybody on the same playing field so that consumer starts to understand the expectations no matter
100%.
where they go,
100%, and
right?
to me but it made it easier because they go, "Okay, I got all of this.
Yeah.
Perfect.
Sure, I've done this once.
Yes.
It's
I have
just
it all easily
rinse and
saved."
repeat right
Yes.
now, right?
And so we get a lot of this documentation up front, um, and it's for a couple of reasons. I wanna know that we have some meat on the bones here. I wanna know that we can move forward. Um, and once the documents come in, we prepare a budget for you. So we say, "Okay, here's how a rough rate would look like today." And
Right.
you'll often see that I'll inflate the rate a little bit.
Sure.
If a market rate is 4.10, I'll go 4.24.
Okay.
And I'll say,
Rates change
rates
quickly.
change quite a bit.
Yeah.
Let's insulate ourselves a little bit.
Yeah.
If you're comfortable with the payments at 4.24, great.
Yeah.
And if we get a better rate at the time, awesome. If we're looking past this 3-month range, I've had it happen where um, that exact scenario happened where rates went up and down within, I think it was 6 to 8 months that we were looking with them. And by the time we funded, we were at the rate that I had forecasted, the one that I had used that was slightly inflated.
Yep.
And they're like, "Well, we were good with this anyways, so
What difference does it make?
what difference does it make? We were prepared for that rate."
Yeah.
But the idea is, you have to know the budget on a monthly basis, but you got to know your budget for when it comes to closing costs
Yeah.
because that often gets overlooked. And so, closing costs, that is your legal fees, your land transfer tax, um, your appraisal.
Disbursements.
So the appraisal is one that it catches some people, I guess, by surprise.
Yeah.
And I always put it on the front end. I go, listen, if we can get an AVM, which is like an automated valuation model, like an auto appraisal,
Yep.
it saves us time. It's only $100, but let's prepare to get a full appraisal.
Yeah.
And if we don't need it, awesome.
So what's the full appraisal cost right now?
About 480.
Okay, so it's about the same as a home inspection.
Yeah, about 480
Yeah.
ish. And if you have a shorter time frame, you got to throw a rush on that.
Depends on who the appraiser is and what your relationship is
100%.
with the appraiser,
Yeah,
right?
100%, and then it'll depend on the property,
Mm,
right? Rush, oh, you have a septic, oh, you have this, you have that.
yeah.
So all that stuff starts to factor in. Um, the other thing that I like to throw in as like a to account for in closing costs, an extra $1,000
Okay. For what?
for a bunch of things. So one, title insurance.
Okay.
Title insurance is something you got to pay when you are closing with the lawyers.
Yeah.
It's become a regular occurrence.
I don't know a lawyer that'll close without it anymore.
I don't know a lender that goes without it.
Yeah. And if
Um,
they don't, if the consumer doesn't take it, if it's not conditioned with the consumer, the lender's taking
yeah,
it out in the back end.
It
It's
it's
like
it's always
like
done,
mortgage
and
insurance.
a rough ballpark estimate on that is like 3 to $500.
Yeah, I think it's 350 plus a registration fee of $100 now. So
It
I think
depends on
you're,
the mortgage size,
yeah,
but throw that in there. It's a one-time fee.
yeah.
It's not something you're paying recurring. Um,
But we'll talk about that another day because it does change. Believe it or not.
on
Your insurance, your title insurance is only valued at the value of the house that it's at the time. So if there's a dramatic increase, you actually have to buy more insurance to increase the value of the mortgage or
interest I've never
of the
had to
policy.
do that yet.
Yeah, because you haven't been in long enough. But a lot of people that bought in, say, 2006 or 15 paid 280,000 for their house.
Mhm.
Their house shot up to
Sure.
600,000. They're short in their title insurance policy right now.
Interesting.
It doesn't cost much. I think it's $100 to up it or
One-time
something.
fee,
That's just
yeah.
another one-time fee,
Makes
but
you
it
wonder
brings
how
you in
many
line.
policies are sitting there that are
Undervalued.
underinsured
Oh yeah, 100%.
because there's probably
Yeah.
a mountain.
Oh yeah.
Um, but ideally with that extra $1,000 buffer,
Mhm.
you can cover your title insurance, which I don't include as part of legal fees. It's just an extra kind of,
Yeah.
and then whatever adjustments you have on closing with the lawyers.
Yeah.
Meaning, depending where in the year you're buying your house, you may have to pay back some property tax.
Yeah.
So with the property tax, because you're the
Well, it
guy,
also depends on how that person pays their property tax,
bingo.
right?
Sometimes people pay for the full year and
Yeah.
they're moving in June, so you've got to pay them back for that
Yeah.
latter half of the year. Um, and I'd rather we account for an extra $1,000 and not have to use it
Yeah. I think if I remember correctly, Sue gives them tells them 2.75%
for closing
for
costs.
close will cover all of the closing costs,
Yeah, it's a
right?
good estimate.
You
People like
know,
to see it itemized
yeah.
because then they'll see their legal costs and then they'll go,
Yeah, but
"What's this and
if you're
that?"
saving and you're an insured mortgage at 5% down, first time home buyer, you're going to need 7 almost 8% down payment,
Depending on the price
depending
point
on
and
the price
depending
point.
if you've
Yeah,
been well, as a first-time home buyer, if both of you are first-time home buyers, you're
sure,
saving on that land transfer
yep,
tax.
100%.
But the moral of the story is you gotta account for closing costs,
Yeah,
right? So it's not just that you need your down payment.
yeah,
You gotta pay people to get this closed for you, and by people, I mean the lawyers,
yep.
and you gotta pay
And sometimes the mortgage agent,
S
depending on the scenario, sometimes there's a fee there as
sometimes,
well, right?
but in this scenario, we've have first-time home buyers who are likely putting less than 20%
Oh
down,
yeah,
and in this scenario, you likely if you're putting less than 20% down, you're not paying a broker fee.
no, true, true.
So,
Yep,
but that is a good point
depending on the
because
scenario, right?
yeah, so that is sort of how the first conversation goes. We try to suss all of this out. We collect all documents. We get your budget built out, and ideally at that point, you have a good idea of I was thinking I was going to be able to afford 450, but I can probably push it to 475 or 500 even.
Yeah,
Um, and you'll be able to then go back to your realtor and you can say, okay, we got a pretty good budget. Greg says we're pre-approved. We can start hunting for houses.
okay.
Um, and then as you go through the process, I always say, send me the listings because property taxes can vary dramatically in cities,
Oh,
like a lot.
yeah.
Like even sometimes somebody will send me an MLS and I go, that's how much taxes are there?
Mhm. Port Colborne, for example, has very high property taxes for what the town has.
For the price point of the home.
Yeah, yeah,
Um, and so it's like an iterative process where I go, okay, you're looking at 123 Fake Street. Here's what this would look like at the three different maybe offers you're considering giving.
sure.
Here's how those monthly payments would differ. Oftentimes, if we're looking at a 425, 450, and 475, you're looking at a couple bucks a month
Yeah, you're not
in
talking
in
significant.
exactly. Um, so we've covered that. The next thing we're gonna say is You've put an offer in on a house.
Yep. So hold on,
It's
hold on. Let's do the let we've got them pre-approved.
okay.
Let's take a
Let's
break
pause
there,
there.
and then we'll come back and talk about what
Sure.
happens once you got them
It's a
hooked.
great place to stop.
Perfect.
Wake up to the world you've been missing. Time to jump out of bed in the morning. No day, no life, now we're living.
Welcome back to part two.
Part two.
Part two.
So you've been pre-approved.
Been pre-approved. I've sent them to you.
Yep.
You've gone through the
And I sent
process.
them back to you.
I've got them back.
Yeah.
Now we've gone and looked at some houses,
Mhm.
and they think they found the one, which I can guarantee you isn't the one, but but they think they found the one.
Okay.
And now we're talking about submitting an offer.
Okay.
What do you do?
This is a great question because I was already going to jump to offer accepted.
Oh yeah, no.
But this
There's
is
a process to
there is a
this.
process here. And so
So, do you often hear from realtors?
um yes, because I will normally touch base. I try to touch base and say, hey,
It,
like you said, normally I in a perfect world they have said, hey, look out for this in this client.
yeah, yeah, and you've got a communication door open.
Exactly. You got to
Here's why I asked that. It's kind of a trick question because it goes to my realtors. My realtor friends, please don't make up how long it takes to get financing approval. Depending on the client, it could take longer. It could take shorter. If you just ram in 5 business days or 7 calendar days or 14
Mhm.
days, it may be a file that takes longer. So talk to the mortgage agent. Have a conversation
Huge.
with them and say, I need 10 days, whatever the case may be. Because
Yeah.
when you put it in the APS, the agreement of purchase and sale, I can then go to the other realtor who I'm presenting the offer to and say, listen, here's why we need the extra few days for the financing. Dispel any myths right up
It
front.
also goes to show that you're serious, you're legit, and
Yeah.
you've got an idea, um, because it's a huge point you're bringing up. That what they call like an SLA, a service level agreement,
Yep.
which is pretty much their fancy way of saying what's our wait time.
Yeah.
It does change.
Yeah.
So sometimes you'll get a lender who has a very attractive rate special.
Okay.
Okay,
Yep.
this happened with a big green bank the other week.
Yeah.
Okay,
Happened with a big red bag before too.
yeah, that did happen with a big red bank, but
Mhm.
I'm saying this because I have some fresh numbers.
Oh, okay.
Um, they had a really attractive rate special where their rates didn't climb for fixed rates as fast as other lenders did. So their rates stayed low.
Okay.
We get an email from their representative, their BDM,
Yeah.
who says, normally I'm trying to remember the full details, but it was like we normally get 3,000 submissions in a month. Right now we're working on 9,000.
Wow.
So what this did is it dramatically shifted how fast they can pick up a file, review it, and underwrite it.
And keep in mind, and I think this is also important for the consumer to know is if you go to the big green bank's underwriters aren't just underwriting the big green bank. They actually underwrite other banks as well. So it can affect that way as well. So it may not necessarily be your lender. This is a little bit in the weeds, but it can be dramatically affected by factors that really, at the end of the
Are
day,
way beyond your
way
control.
beyond your
Yes.
control. So
And
you need to know that service level number when you're
100%.
writing an APS.
And so sometimes when I'm talking to clients, I go, listen, this rate might be X amount lower, but we have some sort of road bump that we want them to review quickly,
Yep.
and I'm not confident we're going to get them to do that.
Yeah.
So let's go with, the bird in the hand is worth two in the bush.
Sure.
The one that we've kind of tentatively talked to, the one that has tentatively on the phone said, yeah, we kind of like the way this
Yep. We
looks.
like this file.
Um, and so I think what you were really getting at with all this was how long should we be setting this condition of finance window
Yeah.
for?
100%.
Because I think everybody should always put one in. I
Yep.
mean, and if you're not putting one in, I guess you're buying cash,
Which you're not.
which you're not, which means we're not having a conversation.
Yeah, which listen, there's a misnomer out there that when somebody says, it's a cash offer, it's not a cash offer. 99% of the time, a cash offer just means they're willing to roll the dice on financing.
Yes.
That's really what it comes down to. A cash offer is not a cash offer in almost all circumstances. In most cases, they're going to be financing it. They just know that they're financing, or they think that they're financing is
Or
rock
they've done this
solid.
before where they know what the alternative options are, right?
Yes.
Meaning alternative is you've got to set up some sort of private loan here.
Yep. B lender, private loan, whatever the case may
Whatever
be.
the case
Yep.
may be. And so in a perfect world, what happens is you guys have put in X amount of days for condition of finance,
Sure.
right?
Yep.
And this is where we get the live file back. We goes, hey Greg, we got an accepted
Yep.
offer.
Yay,
Everybody's so happy.
congratulations.
So this is where the rubber hits the road for us. The file has officially gone live, which means now we've selected our lender, or we're kind of deciding between one or
Yep.
two. We're kind of just waiting to see how the dust settles. We got to decide now. Now
Okay.
we submit.
Yep.
And one misconception I will say is sometimes clients say, well, can't we submit to a handful and see what everybody comes back at?
Oof. Yeah, lenders love that.
Right. And I think it's just it's a misconception because of hearing the word shop around,
Yes, 100%.
right?
Yep.
People hear, well, shop around. Your broker will help you shop around. And they go, okay, well, let's submit, see who comes back with the best
Yeah.
stuff, right?
No.
And essentially when your broker or your mortgage agent has reviewed your file, they've done the shopping on the back end, right?
Yes.
And they've said, based on these details, based on the lender wait times, the lender appetites, and these little weird nuances to your application, we're pretty certain you're going to fit within, these 3 to 5
Sure.
lenders.
Yep.
So that whole shopping thing, it's
But this comes down to the trust that you, again, we talked about trust with the realtor. Trusting your mortgage agent to make the right recommendation for you
yeah,
is huge. They do, and I've seen this. They will actually have multiple conversations with BDMs. For those of you who don't know, business development manager, I believe
which is
that's
like a rep for the lender.
yeah, it's the person that is the intermediary between
Yes.
the underwriting and the actual mortgage agent. So what it does is it allows them to pick up the phone and say, "Hey, listen, I got this file. Here are the qualities of this file," and the BDM will give you an appetite whether or
Sure.
not they're interested or not.
They'll
That's
say,
happening.
you know what?
Yeah,
We're not loving that right now. We're not doing septics,
yeah.
or
Wells,
we would do it, but we gotta decrease the loan to value a bit. It's
or we don't go to that market, which is another one.
the F
The
word, 40 read.
yeah, or some Port Colborne seems to be the hotbed for that one right now.
Yeah.
But I think that once you develop that trust with your mortgage agent, you're going to know that because they've talked to you through this process,
Mhm.
right? They've said to you, you know what, we've shopped you around, we've looked at your file, and we think this is the best fit for you.
Yeah.
Right. It's no different than going and shopping for a house. The realtor's not going to tell you which house to buy, but they're sure going to say, based on the information that you
I like
gave
this one.
me, this is the one that I
Yep.
think best fits what you've defined to me as your scenario.
At the end of the day, I had heard this early on, and I think it holds true. And I don't know, maybe it was Sue who said it, but we advise, they instruct,
Yeah.
right? And so when I'm going through my budget and I'm outlining the lenders, we have a few other features or details that can distinguish mortgages
Right.
that I will say, okay, is this an important? Let's put a check mark on this one. And then it helps them kind of make a decision. Meaning, if all things are the same, is there one that really appeals to you? Like,
Yeah.
do you just want to pick your bank? Do you just want to pick the lowest rate? Like, what's
And one thing I think that I've heard a number of times from clients is I want to have somebody to talk to. So the difference between a monoline and a big bank, right? Like the big green bank, you can walk in and talk to somebody at the
Mhm.
branch level. You go to First Nat, I'll pick on
Sure.
First Nat for today. You go to First Nat, you're not walking into the branch. You're calling a customer service line and hoping to get that. So again, depending on your appetite, depending on who you are as
Yep.
a person, you may choose the bank just because you want that comfort level, or you want to be able to get other products, or whatever the
Whatever
case
your
may
reasoning
be.
is,
Whatever your
I
reasoning
I will
is,
say
your
a lot of times, even if we have placed a client with a large bank, they'll still come to us and be like, "Hey, how do we do this?
Yeah.
How do we do that?"
Yeah.
Which is what we're here for. I'm here to facilitate. I'm here to help in any way. Because clients don't know that after we fund, uh, my job with the lender and them is I have to restart that job. Is what I'm saying. I
Yeah.
have to get a new client consent form. My job kind of begins
changes.
again.
Yeah.
But yeah, so then we've selected lender, we've submitted to the lender, and now we get all of our documents in. And in this scenario, let's just say we get what's called a commitment back in 24 hours.
Okay.
Okay. This lender has said, okay, we reviewed everything. We're sending you a commitment. And what a commitment is, and this is where in the last month or so, I got burned by using some jargon.
Okay.
I think you know.
I do know.
Okay. And so what a commitment is this is the lender's,
Stipulations.
but it's also what I think a lot of people think of as an approval.
Yes.
Okay.
Mm,
This is what people think of as the approval. And so somebody might say, well, we're still waiting on an approval. When are we getting an approval? And I might say, we've got the commitment.
yeah.
And this is where, um,
They're not the same, but they are.
but they are, right? And the reason I think you say they're not the same is because the commitment it's the contract the lender's given you, and it says, we are willing to lend on this as long as you can satisfy these conditions.
Yes.
It's a conditional approval.
Yep.
And every single commitment I have ever received comes with conditions.
Yes.
Now, some of these conditions, let's just say they've given us 10. Some of them are silly.
Yeah.
Like you've got to,
Prove the taxes.
not even that.
Oh no. Sillier than that?
Sometimes
Okay.
it's like, I'm trying to think right now what some of the silly ones are. Like you've got to, I can't even think of, but like there'll be goofy ones. Like you got to have a signed commitment is a condition.
Okay.
Okay.
Yeah.
Which is like that. Are you kidding me?
Yeah.
But essentially in the commitment, the lender will say, okay, we want to confirm the income as you had it shown on the application, which ideally on the front end, we collected the documents for that. They'll say, we want to show down payment history. We want 90 days for that. Ideally, we had that there, right?
Yeah.
And they're going to give all these commitments that in a perfect world, we have the documents for.
Sure.
So we send those into the lender, and now it becomes have we given them the information in a way that they're happy with?
Okay.
So we may have sent in some bank statements, and they may come back to us and they may say, what is this large deposit for? It was over $1,500 2 weeks ago. Where did this come from? So they'll go through the documents and they'll start saying, okay, can you
They'll
provide
start
some
asking questions.
start asking questions, right? Because they're also protecting themselves. It all comes down to AML,
Yep.
anti-money laundering,
Yep.
right? And so we go back and forth. They may ask for additional documents. And this is where sometimes clients get frustrated. They go, well, we've given them everything. Well, listen, you're asking for $250,000, $500,000.
Yep.
They just want to be certain that you're not doing anything fraudulent, right? You're not lying to them about anything.
What I don't think the consumer understands is that there is something out there, and we'll very briefly hit on this, called AML, anti-money laundering legislation. It's called Proceeds of Crime and Money Laundering Terrorist Financing Act. PCMLFT, something like
yeah.
that. And both the realtor and the mortgage agent, and to a certain extent title insurers now, all have AML obligations. We all have to record your identification. We all have to have copies of it. We all have to submit you to make sure that you are not a terrorist funding. You're not from a country like Iran, Iraq. There's a bunch of countries that are on basically what I call the no-fly
like a watch list. Yeah.
a watch list. We have to make sure you're not on there. There's a bunch of steps that we have to do.
Yes.
So we're not asking because we want to ask. We're asking because we're legally obligated to ask. And mortgage agents and realtors bear the brunt of that in the transaction.
And the lender is making sure that they're not funding anything nefarious.
Yeah, 100% they are.
Right? They don't want to be
I mean, we're talking fines into the hundreds of thousands of dollars.
But we're also talking about sums that are into the hundreds of
Yeah,
thousands.
100%.
Right? Like you could be giving somebody who's got something that they're plotting, and you've given them $500,000.
Yeah,
because they
100%.
could produce the paperwork to do it.
Yep.
And so they're requesting documents. Listen, I've had underwriters who say, listen, I can see the money moving this way, that way. I get it. I just need to be able to prove it
And explain it.
to my bosses,
Yeah.
right? Because sometimes they have to get their own, internal audits done and that kind of stuff. So this is where that back and forth begins within that condition of finance window. And in a perfect world, income and down payment would be satisfied within that window.
Okay. Yep.
In a perfect
Yep.
world. There are times where we have satisfied all conditions within that window, and there have been times where we have satisfied none of those within that window.
Yep.
And then, the conversation becomes, how confident are we?
Yes. And that's where your expertise and that trust level comes in again, because and I've seen it where, you take the client at their word. You don't do your homework. You have a relationship with the mortgage agent. You trust the mortgage agent. And then all of a sudden all hell breaks loose because the client lied
Sure.
or steps along the way. Listen, this is not the time to put yourself in jeopardy,
No.
right? Yeah, and what Greg's referring to is, you may waive your condition of financing and not have your mortgage completely
Lined up.
lined up 100%. If you waive that financing and that's your only condition in that offer, you're not bound to that agreement, right? So there are repercussions of
If you
not
don't
being
follow
if you don't
through.
follow through.
Yeah.
So honesty with your finances,
Mhm.
with your mortgage agent is paramount
Yeah.
through this process. Don't hide things. If you've got something in your credit, or you've got something, or you've got a private something somewhere, don't hide it because it's going to get discovered.
Well, also, for example, we talked about TransUnion Equifax.
Yeah.
Maybe something didn't show up on your Equifax,
Yeah.
but the lender pulls a TransUnion.
Yeah.
And you were thinking, geez, I pulled a fast one over Greg. He didn't ask me about insert
The
issue.
Kojiko bill,
Yeah.
right?
Whatever it may be. Uh, if they, you know, pull that TransUnion and it shows up on your credit bureau for TransUnion,
Yep.
and now they say, well, what is this?
Yeah.
We've got to answer to that.
Yep.
Right. So I actually had a client who this was years ago. There was a potential. We had to repair his credits. We had some time, but there was potential for him to have like $100,000 bill with Enbridge. Yeah. It was some sort of clerical error. Something happened and his name got attached to this. It was on like some commercial property that he left years ago. They hit him with the bill and he goes, this might be on my credit bureau.
Wow.
Right. And so we had to initially go in with, okay, well, is this showing up anywhere? Should we check it? Like, long story short, never showed up. It all got resolved.
Yeah.
But things like that occur, right?
Sure.
And if he wasn't upfront and he goes, I'm just going to see if this guy brings it up, and all of a sudden it gets found at the last minute, like,
Yeah.
you're going to come up with an extra $100,000 to pay this out? Because a lender might request it.
And that is the thing, is that they could condition it after the fact,
Yes.
right? Like, just because that mortgage commitment, things change. Like, and people say, oh, I want to have a longer closing. A longer closing is just more opportunity for problems to arise,
Yeah,
right? Like, there's an ideal window of 30 to 60 days to close a deal.
I think it's perfect because the lender also sees that long closing and goes, I have urgent stuff this week.
Yeah.
And
Pushes you to the back of the
it
pile.
happens.
100%.
It happens all the time. And it's not a fault of theirs. It's that, all of a sudden somebody submitted something to them with a 30-day close or a 20-day close.
Yep.
And they're like, holy Hannah, we have to fund this.
Yeah.
Right. And so my 90-day close,
Gets pushed to the wayside,
okay, I'll look at this in 2 weeks when I'm not drowning.
which also increases your risk, right, as a consumer. So I think you got to be, like, when you're talking, again, this comes back to the communication between the
Yeah.
mortgage agent and the realtor. There is an ideal window with most lenders of how, depending on how busy they are, and if they've got a relationship with their BDM,
Yeah.
they're going to know how busy that lender particularly is. And I think this is more, when it comes to rate specials and all those things that happen, but there could be delays in that process.
Mhm.
And you have to be informed to provide your consent, right, to move forward.
Yeah.
Information is your best friend through this process, whether it's the home buying process, the financing process, the closing process. The more information you get, pay attention to it.
Mhm.
Like, you hire a realtor and a mortgage agent, a lawyer, because of their expertise.
Yeah.
Don't just assume that their expertise is going to carry the way through the transaction. You have to be engaged in that process to make sure that you understand what your risk and reward is, versus just washing your hands going, my realtor told me, but I didn't really pay attention to him.
The other thing that I'll bring up, that sometimes, like, we're talking about fulfilling these conditions and lenders requesting extra documents. I've had sometimes people go, oh my goodness, they're going to cancel the deal. Right. And again, I just want to stress enough that, and I this is what I say to the clients. I go, I'm not concerned about showing this. Are you concerned? They've asked for an extra month, or they've asked for a different screenshot, for example.
Yeah.
I go, that's just a screenshot.
Yeah.
They still want to move forward. They just want to know that
Yeah.
it was taken on today's date or whatever.
Yeah. One of the big things I hear all the time is people taking pictures of their documents, and how lenders don't like pictures. Get a scanner. Figure out how to print it and
Listen,
scan it
there's an app
because
called Cam Scanner.
Cam Scan, it's built into every phone now. Start using
Yeah.
that. Don't use pictures, please, because it doesn't
Um,
work.
yeah. So that's the whole condition of finance window and the whole conditional approval. Because
Okay.
I think I've started to really stress to people all approvals come conditional.
Okay.
We've got these conditions we've got to check off. Majority of the documents are here. Uh, Sometimes there might be something else that's been requested, or you got to make sure these two people have the same name,
Oh yeah, yeah.
right?
Especially married women
That
who's leave their married maiden name behind.
Yep.
Yep. So okay, so that seems like good time to break.
Okay.
When we come back, we've got the commitment.
hmm We've worked on
What
conditions.
are the pitfalls once all the conditions are met?
Okay.
Wake up to the world you've been missing. Time to jump out of bed in the morning. No day, no life, now we're living. Can you feel it in the air that you're breathing?
Welcome out to
All right. Number 3.
part 3.
Part 3 of part 2.
Part 3 of session 2.
I like that.
We're talking our first time home buyers platform.
Mhm.
Kind of an online seminar to try and get people more educated on the process.
Yeah, it's a good one.
We spent an hour with mortgage or realtor. Now we're under the third section of mortgage agents, and we have got you connected with the mortgage agent. We've gone through the process. We've got an approval or a mortgage commitment, not an
Mhm.
approval, and that we fulfilled all the conditions in there because that's what the lender has asked for.
Mhm.
So now we've basically said, okay, we're buying the house. What can go wrong?
Yeah, so you've checked off all your boxes. Your commitment is what the industry calls broker complete.
Yep, love that term.
Yeah, I got to stop using it because
Gets you in trouble.
yes, but what it essentially means is all conditions have been satisfied, and the lender is happy with the documentation. They're ready to move forward. They're ready to send instructions to the lawyer if they haven't already.
Yep.
A good rule of thumb is you want to have all of these conditions satisfied in a perfect world 10 business days before closing,
Sure.
that your lawyer's happy.
Yeah.
Um, but we dive into the what not to do.
Yes, and this is important. So
It is.
I think this is where a lot of people just think that, oh, I've got my mortgage, I'm good to go, and I'll go do whatever I want to do.
Yeah, I'll go start spending $20,000 on furnishings, and
Yes.
I'll go buy the new truck because
I'll take out the line of credit for the
Yeah.
renovations.
whatever it is, you've got to stay disciplined and patient. You can't be making any large purchases, and your financial situation cannot change in the way of taking on additional debt
Yeah.
before you close on the house.
Yeah.
And the reason for that is if we're working with this long closing date, 90 days out, whatever it might be,
Sure.
even if it's 60 days out, the lender can still pull credit
Yeah.
again.
100%. And make sure that the picture that was painted is still the same picture.
Yeah. And if that happens, and all of a sudden you have a new $50,000 vehicle loan on there for Ford or
Yeah.
whoever it may be,
Sure.
um, everything changes.
Oh, 100%. And I think that's where, the cautionary tale of we hear it all the time is, when I bought, I got my mortgage, I'm going to go out and buy my new truck so that I can move all the stuff. You're not buying anything. You're not doing
Do nothing.
anything.
Sit on your hands.
Yes.
We have this.
Save money.
Yes. Save all of it because you're going to need it. You're
Yeah.
moving into a house and you've spent a lot of money on this,
Yeah.
and things happen. We have this like 10 rules of what not to do. And a
Yep.
lot of it is just, it all comes down to don't spend
Yeah.
money, don't take on debt, don't do anything that is going to change.
Well, don't max out your credit cards.
Yeah.
That's a big one. Because people, all of a sudden, yeah, I've got this credit limit. Okay, but when you qualified for that mortgage, your credit card was down here.
So I was about to bring up GDS, TDS that we never touched on,
perfect. Even better.
because
You go
that
ahead.
is essentially what you're not wanting to
Alter,
alter.
Yeah.
That's a good way to say it. And
especially
so
if you're at close to the maxes.
you'll hear the term lending ratios talked about a lot, and that's referring to GDS, TDS, gross debt service ratio, and total debt service ratio.
Yep.
And what these two numbers are, they're a metric that banks and lenders use to determine how much of your income is going towards debts and the house. And it looks like this. So they'll take a look at your income pre-tax, and they'll say, let's just say, for example, you make $3,000 a month.
Yep.
And your GDS number is 35. That means based on your application, 35% of that income is going towards your housing costs. Okay. And now if we look at our total debt service ratio, this takes everything in GDS, which is the principal, the interest, the taxes, and your heat. We call that PIF. It takes all of that for your house. And it also includes any other debts where if you were to stop paying them, they wouldn't go away.
Right.
So a cell phone bill, you stop paying it, they'll cut off service.
Sure.
It's, a credit card, line of credit, that kind of sort of debt you owe that's secured likely against something. I guess credit cards likely aren't.
Yeah.
Those don't go anywhere. And so if you're carrying a balance where your monthly payment is $300, you have to include that in your TDS.
Yeah.
And so these numbers, as a good rule of thumb, cannot exceed 39 for your GDS and 44 for your TDS.
Right.
Meaning 39% of your income no more than 39% of your income should be going towards paying for your housing expenses at the stress tested rate.
Yep. We haven't even talked to
We haven't even talked about
yet.
that. And in TDS, it's everything included in GDS plus any of those student loans,
Yep.
right? Credit card, line of credit, and that kind of stuff.
Yep.
So those are the lending ratios. And now you'll see that those are a hard stop at insured mortgages, meaning less than 20% down. And that is set out by the insurers.
Yeah.
Now, when you get into the world of 20% or more, those numbers become a little more fluid.
Right.
They can go as high as 60 and 60.
Yeah.
Which is wild.
Absurd to me, but okay.
It happens.
But I think this goes to the affordability conversation that we've been, hearing about for years.
Yep.
You and I were talking off air before we started today about my first house at $104,900, and we were making almost $80,000 a year between the two of us in our household. Well, our house, the ratios were so absurd that it just, it was a slam dunk for all intents and purposes for
100%.
the lender. That same $80,000 today is going to get you a $300,000, $325,000 mortgage, give or take.
Mm-hmm.
And what does that get you? Right. And that's a gap. That's a process over 20 years that is, kind of expanded so much, where the average household in Niagara right now is about $93,000 in income. So it's really getting you around a $400,000 mortgage, give or take.
That's if you have no student loans or
That's if
vehicle
you've got
payments.
no other expenses.
Yep.
That's just what you're going to qualify for. So you're not really, this gap of, income to what the actual value of the house is really what's killing affordability for people, right? So those ratios are putting...
You'll hear people talk about, oh, I had an 11%, I had this in the teens interest rate on my mortgage in, the 80s or whatever.
Okay, first of all, let's take a step back. Just because you weren't born in the 80s, my parents had a mortgage of 24%.
Right.
They literally went backwards every month.
It
they
happens,
were paying more interest than they
for how
were
long?
For years. It stayed in place for 2 years. Like their mortgage went up over that period of time because they weren't paying anywhere near enough. That was when we started to assume mortgages started to get assumed and all sorts of stuff just to get people into the market. But I mean, you were also talking 24% on an $80,000 house. So, it was kind of this,
It's so difficult to compare.
Yeah. But
the
they're
one
put
thing
in
that
place,
is
those
clear,
numbers are put in place. And I think what people understand is to protect you from overspending, over leveraging.
Yes.
Because when you think about 5 years ago, when in 2020, 2021, when people were spending gobs of money on a house over the market value, those ratios kind of were, they were there. But if you went to certain lenders, they didn't care. And all of a sudden now in the position where we are, where those people can't actually sell their houses
Yeah.
because people didn't hold to those ratios because they came in and they sold their house in, I'll pick on Toronto, they sold their house in Toronto.
Mhm.
They had a bunch of cash so they could afford to overpay, but they still overpaid to the point where they can't get out of the house anymore.
Yeah, I think it was so we touched on those lending ratios. We're kind of diving into stress test right now.
Yes, 100%.
So
I think
because
we are.
you're talking about 2020
Yeah.
and prices being higher and people spending more. I think the other detail was that people were stress tested lower.
Yeah.
And in many cases were stress tested still below what a market rate is right now.
Yeah.
And so what the stress test is you have to qualify for your mortgage. So if, for example, the market rate was 4%, you have to qualify for this mortgage at either 5.25% or 2% higher than your contract rate. And so if contract rate is
Which is,
4,
and you have to choose the higher,
you have to
correct?
choose the higher.
Right.
So if contract rate is 4, we're stress testing you at
Yeah.
6. And so what does this do? Well, it decreases how much you can get approved for
Yep.
because those lending ratios are based on that stress tested rate. And so a lot of folks don't love the stress test because it limits them on their purchasing power, right? You're going to tell me I can't afford this house at it's only 4%, but you're telling me I have to qualify at 6.
Yeah.
The idea behind it is that it's going to insulate you in the event things go
Sorry.
awry,
Yeah.
right? Like rates go up dramatically and you have to renew at something higher.
Insert 2023, where
Boom.
the rates flew through the roof.
Yeah.
The problem that we face right now is that interest rates right now are where they traditionally are.
Yeah, they're pretty good.
So what are we stress testing? Right? Like a long term, like, and I think what has happened is the government has tried to insulate short term pain, right, for long term gain. Right? They're trying to make sure that the consumer can absorb the swells and valleys of the interest rate world. Well, you know, that was fine when we were getting mortgages at 1.75%. Ask any person out there right now if they expect we'll ever see 1.75% again, short of a complete mortgage world collapse,
Mhm.
which, I mean, hey, with what's
Could
going
happen.
on in the world right now,
Sure.
who the hell knows? But realistically, we are where interest rates traditionally are.
Yeah, I think what Steve's saying is it's not a perfect
Definitely not.
it's not a perfect metric, it's not a perfect test. The idea behind it means well and I think has done some good for us,
Sure.
but I think it is impeding the market right now.
100% it
Because
is.
what you're saying is, listen, our rates right now are pretty average in terms of like if you look over the grand scheme of things, high threes, low to mid fours, like those are pretty dang good.
I bought my first house at 4.24,
Right.
28
So
plus years ago, almost 25 years
we're
ago.
we're sitting pretty good. And what Steve's trying to say is there needs to be almost like an asterisk to the rate, to the stress test, meaning and we're not saying we have the answer, nor do we.
No, but I think that a
It is a
limit,
bit of an imperfect system.
I think stress testing first time home buyers is a great idea. Okay. But to somebody who's been in their house 15 years,
Yeah.
stress testing them doesn't seem to make as much sense because
It
they've
would almost be like you should be able to bypass it if your amortization is below a certain amount.
sure, or or you've like me got a mortgage that's this big to the value of my house. Well, if I'm moving
Yeah.
up, why are you stress testing me?
If you can
Right?
say your LTV is under 40 and your amortization's 15 or under,
Yeah, like
no
what's
stress
the
test. Because
yeah
at least then if it hits the fan,
yeah
the proverbial,
or
you have
or
that.
make a minimum mortgage purchase stress test amount. So right now, affordability is around 400 for most households, 450, right?
For the
So
mortgage.
for first time home buyers, if they want to go out and buy something for 500 or more, right? Because that's what we do down payments tied to. that may be where you start to stress test people, right? But if you've got that household that's, they're just trying to get into the market,
Yep.
right? They're trying to build some equity. They're trying to do some saving. Why are we stress testing those people on the lowest end of the mortgages? Yeah, there's probably the biggest margin for risk there because they haven't
Mhm.
purchased a home before. But realistically, this pool of first-time home buyers that if they can finally afford
Mhm.
on paper what historically we've accepted, why are we preventing them now from getting into the market,
Yeah.
right? Because we're talking about finances with all this, and if you haven't heard yet, the GST on new home sales and HST on new home sales is all gone for the next year. What is that going to accomplish, right? Like, is it
It's a
beneficial? It's
good
good,
idea.
but the new home build isn't the only market that's stalled.
No.
The resale market is stalled as well, and that's partially because, with interest rates at 4 right now, I think 4.24 is not unrealistic.
A little
You're
higher.
qualifying at 6.5%.
Mhm.
Well, what good is this doing anybody?
Yeah.
Right? The time for it is gone. For that particular group of people, because the more people we can get in and take and purchasing means the more people that we can get out of their first time home using the equity that they've built up over time to purchase their next home, right? And what the government's missing is that cycle. All the focus
Yeah.
seems to be built right now around new homes. Well, we can't build new homes anyway. We don't have,
Yes.
the cycle of, now we're limiting immigration, and all of a sudden, like we don't have the people to build the houses and
Focus
the
on what's
skilled
already
trades.
built. Yeah.
We've got this influx of inventory in Ontario in particular, and make no bones about it, the Ontario market drives the housing market in this country. I mean, the
Just on this side of
majority
it.
of the people live in the province of Ontario,
Yeah, I
right?
don't know if it would be something like if your non-stress tested ratios are below a certain amount.
Yeah, like there's got to be another solution
I
other
agree.
than a blanket solution, which is what is really starting to piss realtors off on the street, because trying to put blanket solutions on things that
Yeah.
are so nuanced, lenders don't do it. Lenders have,
We're working
discretionary.
within the system we've been given.
Right. So I think that, like we're talking about the stress test, but realistically, they're protection mechanisms,
Yeah.
right? And it's designed to protect you. Just whether or not it's needed anymore is a different, maybe a
Different conversation.
different conversation for a
Yeah, I know
different
your
day.
opinion on that.
And I make no bones about it. I tell every government official I can get in front of that the stress test is stupid. But here's the thing. Every step along the way, that mortgage agent is there to protect you.
Yeah.
So listen, again, it's no different than the realtor. At the end of the day, the realtor's giving you advice that's going to, protect you. The mortgage agent's doing the exact same thing. So when the mortgage agent says, don't buy the boat, whatever you do after the day of closing, we don't care, but don't buy the boat.
Yeah. Between
Right.
now and October, whatever, 1st,
Yeah.
whatever the date is,
Sure.
you put that Visa, that line of credit, however you have access to extra money, you freeze it.
Well, I think that one thing that we didn't talk about that we should hit on before we go is the difference between term and amortization, because I think a lot of people really kind of get confused
Okay.
as to what the difference is between
Did
the
I
two.
say that on air or off air when
No,
I
you
told
said
you?
it off air. I don't think we hit on it on air.
Oh,
So
okay.
let's quickly hit on it. And if we're repeating ourselves because we've been doing
Sure.
this, then you're getting a bit of bonus
So
here.
the amortization, that's a big word. That's part of the jargon of my side of the industry.
Yeah.
People always go, well, I can do a 25 or a 30, or if they've done some research, they'll be like, no, I want a 20 or 15, whatever
Yeah.
their situation is.
Yeah.
Sometimes it confuses them what it means. They go, well, I thought I was taking a 25-year term. I explain it this way, where I say your amortization is the length of your contract and your term is how often you're renegotiating.
Yep.
That.
Yeah. You're locked in for the term of the amortization.
Yes.
So as long as
You're
you
agreeing
re-up
to a
with the same
25-year loan.
bank over and over and over again, your picture, they're just negotiating the rate with you at that point.
Based on
Right.
market conditions.
Based on market conditions. So, sometimes the longer the mortgage, the longer the term, the less you have to renegotiate. The shorter the term, there's more risk sometimes
Sure.
because you don't know what it's going to do.
Pros and cons to
Pros
everything.
and cons to everything. This is one of those areas where I think you really should talk to your mortgage agent and say, hey, what's in the best situation for me? Ron Butler, I don't know if you know who Ron Butler
Yeah.
is, the vulgar
Mhm.
mortgage agent, had somebody on, and I didn't listen to the whole segment, so but he was swearing at mortgage agents who were referring 3-year mortgages right now, who were
Okay.
recommending 3-year mortgages. I didn't listen to the
Yeah,
first,
yeah, yeah.
but he was like completely railing against the idea of a 3-year mortgage right now. I don't know what his logic
Sure.
was. He has different logic than a lot of people do. He
Yep.
thinks outside the box differently. But
Mhm.
that being said, he's got a reason for recommending that to his clients,
Yep.
right? If you're recommending, I think I've said this on air before. I got friends that take a 10-year mortgage,
Mhm.
right? They like that cost certainty. Yeah,
Yeah.
they may pay a little bit more, but they know that they don't have to do this renegotiation for 10 years.
Yeah.
They're locked into it for whatever their comfort level is. And I think that it comes down to that for them.
100%.
I
And,
would,
like, what your 10-year plan is, 5-year plan. Like, you
right.
might know you're staying here for the next 5 years, but if you've
Right, like
come into the
they built
city,
an in-law apartment,
there you go.
right? So they know they got mom with them for however long. They're
Yep.
not going anywhere.
Yeah.
So cost certainty then was huge because mom's part of the equation, et cetera, et cetera. But I think that when lenders, mortgage agents, realtors, and the consumer all get into the same kind of mindset,
Mhm.
if you trust the people that you're working with, if you build on that relationship, at the end of the day, it's going to make the process that much simpler because once we've got to this point, we've got the mortgage approval,
Mhm.
we'll be moving on to the inspection next, which is the next big thing in your home buying process that I think will really kind of guide you
Yeah.
on what to be looking
This is where
for, et
you
cetera, et
dive
cetera,
into what's going on with the
with
house,
the
and it
house.
can affect your mortgage approval.
100%.
So,
So we'll talk to that. We'll get our home inspector on here next time, and we'll chat about be our first guest.
I like that.
All right.
Bye.
All right. Have a good week.